Good evening and welcome to our May London South East Investor Webinar. For those of you who don't know me, I am Donald Leggett and I'm the Head of Investor Relations at London South East, and I'm your host for this evening. We're joined tonight by three excellent companies, two of whom may be familiar to regulars on London South East. Each is an interesting investment opportunity and has future growth potential. We have a strong lineup of speakers for you tonight. We kick off with Robin Brundle, Chairman at Technology Minerals. We have Werner Klingenberg, CEO at Goldplat, and Chris Chang, who's the VP of Corporate Development at Canada Nickel. As usual, each presenter has 30 minutes in total to make their investment case. We spend around 20 minutes talking to slides, and then we take your questions and put them to the speakers. Most investors know us for our free company data and chat boards, which provide a valuable link between companies and investors. Many people in the industry use our bulletin boards, so don't be shy, get on there and let us know what you think of tonight's presentations. It's all helps to build that sense of community around your favorite companies. We do a lot of CEO interviews, but if company strategy and operational updates aren't quite your thing, I do recommend you listen to Pete Higgins and the Investing Matters podcast, which he does for London South East. Pete interviews professional investors and financial journalists, and for serious investors like yourselves, Investing Matters is highly recommended. The feedback on it is phenomenal, so why not give it a go, even if it's not your thing. And if you want to buy stock in Canadian companies like tonight's Canada Nickel, or any of our previous Canadian miners like Silver Viper, the Interactive Investor, the II trading platform, will allow you to trade in Canadian-listed TSX and TSX Venture stocks. Okay, that's enough from me. Time to hear from the companies. Technology Minerals was established to address the circular economy in the battery metals sector. They explore for battery minerals and will recycle, I suspect they don't at the moment, they will recycle cobalt, lithium, nickel, and manganese from the batteries themselves. TechMin floated on AIM in November 2021, and management have been busy developing the business since then. A lead battery recycling plant in Tipton has just got environmental approval, and a 10% stake in the Idaho cobalt and copper licenses has just been sold for £900,000. TechMin chairman Robin Brundle joins us to discuss future growth plans. Welcome, Robin.
Thank you, Donald, and good evening.
Good evening. Yeah, fantastic. It's brilliant to have you, Robin.
Yeah, nice to be here, and thank you for the introduction. It was very succinct.
Very good. Now, over to you. Tell us more about the bright future for TechMin.
I'll do that with pleasure. Okay, so hopefully you can all see the share screen. So we'll move down to the first slide, if we may. So we're delighted to be a company that's trying to strip back the greenwash by doing some doing in the very popular battery metals sector, both by extraction as been described, and also by being early to market with recycling with a number of USPs. So I'd like to take you through our presentation, which really also very much supports the COP26 agenda, and many of the global corporations are looking at our processes in the recycling and also in the extractive sector. And through the presentation, you'll see that there's clear justification right now with the massive demand for the materials for lithium-ion batteries in particular, supporting the move in transportation to electric vehicles. So as has already been said, we've listed on the UK Stock Exchange in November to create the sustainable circular economy. We are split in two, what we've classed as our resource projects for the extractive and end-of-life battery reprocessing. And TM1 is our ticker as Technology Minerals. TM1 owns 49% of the Recyclers Group and has provided the seed capital. The resource projects are at this stage 6 battery metal projects across 3 continents, and they're ethical. and are strategically located for a diverse portfolio. And we'll talk more about those in a moment. The Recyclers Group here in the UK has two key markets. One, as we've said, is the early advantage to lithium-ion recycling, and also industrializing and cleaning up a very long-established lead-acid battery recycling here in the UK. And we're doing this on an industrial scale. So companies such as Benchmark Materials have forecasting significant deficits in the battery materials from the mid-20s, when in actual fact they're already here. The recycling and the reason for our twin track approach is that our knowledge transfer partner in Warwick University is forecasting that by 2030, recycling in the nature in which we're doing it is likely to be able to meet around 22% of the requirements that the lithium-ion battery manufacturers will need. Now, clearly, the other 78% has to be extracted. It has to come from somewhere. And so the narrative for our company, which, 6 years ago, when there was not such a big push, was, let's stay green in one camp and not so green and extractive in the other. But frankly, the two now have to join, given these statistics, that if the transition to greener, cleaner electric transport is to happen at the pace that it's currently forecast at, then there has to be both working hand in hand. The mining assets, again, with all of them, typical junior mining model, where, if you like, a sausage machine where we've been out and identified some really good assets. And of course, the approach that we have as a junior miner is to find mid-tier partners for each of our assets, and to move them up the value chain is our proposition. And you'll hear later that on each of our assets, we're in solid discussions. And as an RNS was announced last week, and just referred to, we've sold a 10% stake in our American asset effectively. So this diagram captures the circular economy that our group is involved in. So all the way from the top right-hand side, from raw material extraction, shows the process through to even through to gigafactory or OEM automotive battery manufacturing. And of course, we want to capture that end of life battery so that we can actually put it through our processes. And the holy grail is then to recirculate those materials back into remanufacturing batteries. So that's the whole genesis of our creation. You'll hear more in a moment about how we've got early to market opportunity on that. So what's our journey been since November? The most recycling business models are predicated on, do you have front-end supply? Do you have capability to process? And of course, do you have off-takers? So what we've done here for the UK, and obviously we are looking at how to roll out our Europe, Asia and America programs, but there'll be more news on that in the following weeks and months to come. But in November, we announced a partnership with a company here in the UK called Slicker Recycling. This gives us a UK capability of collection of all 5 sciences, chemistries of lithium-ion batteries. So what does that mean in reality? Handheld devices such as phones, laptops, iPads, through to e-bicycle batteries, automotive, and even the heavy goods stuff like trains, for example, electric trains. We're able to accommodate all of those sciences through our process, which again gives us a fairly unique position. But Slicker are doing 25,000 collections around the UK with 94 vehicles, 13 depots, and they're acting as our logistics collector to bring the feedstock to our factory gate effectively. We've announced a partnership with Warwick University through WMG, who are world-class in their knowledge and delivering for the British government, delivering the programme of advancements for lithium-ion batteries. We've engaged with an engineering doctorate programme with them, which is a 4-year programme. and we have a veto over what can be taught at the university, so that we don't give away. We can share knowledge, but we don't give away the critical parts to the students effectively. We've got the plant ready, as was described at Tipton. The plant is fully installed. It's ready, waiting to go to produce the lead acid, industrialization of lead acids, which incidentally previously has seen human beings hand sawing and working in amounts of acid to reclaim the lead. But again, we're just waiting for the environmental agency final license to do that. We opened a laboratory at Wolverhampton, which for those of you with laboratories will know is no small investment either, to make sure that as the batches and samples go through the production facilities, that we're able to identify them to leverage the revenue of each of the batches effectively. Appointed some good heads to the group, including Matthew Taylor as the group managing director. And both RNSs in the last week has seen both Tipton and Wolverhampton now, Wolverhampton being the lithium ion plants, have actually received our EA permits, which are the cornerstones of getting all of the cascade of various licenses and operational licenses that then follow on from the permit itself. On the mining side, we've had some very good results from 27 rock samples in the South Dakota. We've acquired 100% in the cobalt copper Blackbird Creek property in Idaho. And again, the American assets that we have there, to our knowledge, that's the only area that has actually so strong in cobalt that it's actually mined for cobalt. So we're very pleased about that, and it's that you've heard that we've these American assets that we've sold the 10% stake in, which we'll hear a bit more a bit later on. And the Spanish work continues. All the sites are having this groundworks done and preparedness for drilling. But we've got some super results coming through, not complete yet, but as soon as they're complete, hopefully in the next few weeks, we'll be announcing some news around the Spanish finds. And again, the Imperium, as I just said, we've sold the 10% interest there. So just going back to the stock market, you'll see at the bottom, we've raised approximately £6 million from the IPO and pre-IPO fundraise. And that's given us the capital to deliver all of the things that we've done so far. So just focusing now on the Recyclers Group. As I said a moment ago, do we have the capability for front end? And so, of course, the collection network here in the UK is a critical pathway, but as also is working with industry partners such as automotive OEMs and also gigafactories as well. So it was released this week that for the first time, the number of gigafactories around the world has now topped 300. In fact, there are going to be 304. And when we first started this program, we thought there were a bit dizzy heights of nearly 200 gigafactories around the world. So that bodes well for people like us that are extracting and also recycling. And so, of course, we then have the situation of the material resale. And because of the lithium ion recycling, we end up with something called a black mass, which has the 4 key salts in them that most of the major corporations around the world wants to get their hands on as a commodity. So we have a whole range of businesses that are offering us to take all of our black mass on an exclusive basis. And we're analysing which of those deals and whether indeed we want to do a multi-trade rather than having all eggs in one basket. So those discussions are ongoing right now. And obviously trading on the commodity markets and back directly to the industry once the materials are proven to be of suitable quality to go back into the front end. So again, another slide, which I won't go through every one of these, but you can see that where the main clients lie. And I will also just mention the licensing that you can see there. Because we need to roll out quickly, we believe we've got about a 2-year advantage with our plant and machinery before any competitors around the world catch up. And therefore, we want to roll it out quickly. We don't have the resource, either in capital or in management, to hit global. So we are in advanced discussions with partners to look at Europe, Asia, and also the United States through licensing and joint venture activities. And again, there'll be more news on that as we go through the year. So the significance, as I said to you, about the grants from the EA is that it's a significant vote of confidence, obviously, that our company has been allocated the permits to be able to operate recycling or waste plants effectively. And very pleasingly that because the environmental agency have suffered dreadfully through headcount and also downtime with COVID, they are dreadfully behind on issuing these licenses and permits. But thankfully, given the nature of what we're doing for the green agenda, the EA have now given us priority status because we're going to help maintain the UK national resilience, national infrastructure, and critical to the environmental protection. So we're particularly delighted about that because it does escalate the rest of the licenses that we need to become fully operational. So the key drivers for us, you can see, again, the stats are on the screen, so you can see that the growth both here in the UK and through Europe and globally is absolutely clear from all the statistics around the automotive and transport methods in general. The key metal shortages, again, it's no secret that China got the jump on the EV strategy and electric vehicle strategy, and they've actually bagged themselves around 80% of the global supply of the raw materials. So there is a scrabble now. We've even got, for the first time in my lifetime, automotive companies directly buying mines when previously they would have wanted a third party or arm's length person to manage any potential brand risk. But the desire for material is such that they're having to go direct and become mining owners themselves, or mine owners themselves. And the recycling, we need to get cracking with this. The UK doesn't currently have any capability en masse in the way in which we're offering. We need to get recycling as quickly as we can, because sadly, even e-bikes and that sort of thing, these batteries are going straight into landfill, and they're pretty lethal things if you get them wrong. And we don't want them in the earth. We don't want them in incinerators. We want to be recycling them and reclaiming these materials. So again, I won't bore you with the statistics, but you can have a quick look at the screen on the market size across Europe. And again, we are focused on lead acid as we roll out the Recyclers program. A, because it's a long-established marketplace. B, there's a huge opportunity here in the UK. And C, the less wealthy continents around the world will be much slower to transition to EV. And if you look at the outputs from 10 or 12 major battery manufacturers, for example, in Brazil, they are doing record numbers of batteries, lead acid batteries. And so there is opportunity around the globe for the lead acid, we believe, for many years to come. So just looking at our mining portfolios, you can see the spread here. Clearly, we're focused on ethical mining as a British company. You can see the Idaho in the USA and also South Dakota. The Ireland lithium project, again, we're expecting to come out with some news for that particular opportunity during the next few weeks as well. Northern Spain, we've touched on. And we have Cameroon, which again is a very big opportunity down in the Cameroon with a large landmass that we've got there. And I think it's very important to say with the USA projects that Jevois, who are, we are bordering on 2 of their sides down strike, actually go live with their extraction towards the end of this year. and we believe that being down strike from them, that we're sitting in a very nice place there, and that's clearly part of the reasons for triggering somebody wanting to buy 10% of that opportunity. So the mining strategy, as we've said, I described it earlier as a little bit of the sausage machine, that we have guys on the ground that are looking for more opportunities to feed into the front end, so that we can actually develop a portfolio of in-house battery metal projects, which are all focused on lithium, rare earth, which often you find with lithium, copper, nickel, cobalt, and manganese as well. And of course, the rare earths at the moment, there's a big push for rare earth because of the demand for warfare, bombs, bits and pieces, guided missiles, and bulletproof vests, and so on. And of course, Biden's statement about 8 weeks ago now, suggesting that the USA has made mining of national importance now in the USA. We know that there are other discussions like these going on here in the UK, and also other countries around Europe and the rest of the world. And we believe that by the end of this year, several more countries will announce that extractive industries and mining for battery and rare earth materials will become popular again and will be given priority, and possibly even cornerstone invested as well. And again, partnerships, because our job is to find them, prove them, push them up the value curve. We look for partners to come in as joint ventures, and of course we continue to earn when those mines actually become extractive as well. And that's how we grow the shareholder value through the mining strategy. So again, you can see this was really the Imperium Blackbird, the sale, the information behind the sale of the 10%. But again, we can come back to detail if anybody wishes to, but it just gives you an indication, that we've got this sort of 14,000 acres of land sitting there that's rich in these minerals. So again, the next two slides, again, I won't go through in too much detail, but you can see that how we, these bar lines are indicating how we push each of these operations up the value curve before we bring in, say, a Rio Tinto or a Glencore, that type of company, to help then go and do the heavy lift on the mining. And again, there's the other three assets that you can see. And you can see that most of them are ready. If they haven't been drilled, they're ready for drilling, and they're all in slightly different states of readiness for that. But again, during the next 12 months, they'll all be proved up effectively. So the investment proposition, really, it's the UK's first listed company for creating a sustainable circular economy. As I said, it's our, we've delivered cutting through the greenwash. We are poised to be a key player in the supply and make sure that this security in the battery metals through the actions that we have in the mining. We are also clearly with the recycling side, with the USPs that we have particularly with our lithium ion plants, gives us we believe a 2-year head start in the market, and the recovery that we're getting from the percentage recovery that we're getting of the materials from the full battery going in at the front end is in the high 99% category at the moment. And again, we're just waiting for the environmental agency permits to go live with those plants. So we're in a state of readiness. We're creating the circular economy. We believe that we're in the right place at the right time. And I would welcome any questions.
Perhaps we should kick off with the next steps for Tipton. And we can come to Wolverhampton. Now, I suppose it's exactly the same question for Wolverhampton. Have you got all your environmental permits? What's next?
Yeah, so what we've done, the direct answer is no. I hate people that skirt around an answer. So the direct answer is not yet. But we're very, very close. So what we have is that we have the permit for the site. We have our application in to be able to operate there. And we can operate, if we wish to do so, we can operate from Monday next week if we want people to hand saw, because the site was previously hand sawing. So we're trying desperately not to do that for all the right health and safety reasons. But if the environmental agency are going to take weeks and months, we may end up being able to start the process by actually recycling in that fashion. And then as soon as we've got the permit, we switch the full plant on, and then it becomes fully automated without human intervention.
Is the plant sitting there ready to go?
Yeah, it has been for months. Yeah, we're fully staffed up. We're ready to go. We've passed our all of our ISO 9000. There's 3 key ISO stages that we've passed. But of course, you can't get full certification for that until you're operational and measured operationally against your documented processes. So all the health and safety, all of the processes that we have in place have all been measured and passed their stages. And so it is literally just waiting for the green light to tip the to put the. Do you
have any sense of whether it might be weeks or months?
Incredibly, it could actually pop up tomorrow morning at 9 o'clock. It could be 3 months, and we're just trying to work with the environmental agency to get to a point where we can make the decisions. If we haven't tipped and heard anything really by Friday this week, we may well then start commencing to get the stores going and to make sure that we get some cash revenue receipts coming in through June.
Yes, you want to get some revenue streams going, don't you?
We do. We were originally hoping for a January start, to be frank, and we've been pushing to make sure that we're in this state of readiness and maintain it. Which is no easy task, because staff can get disillusioned if they're looking at each other half the day. But we've managed that, and if by Monday, then we will activate the storing, because if we have to then switch that off a week later, so be it.
Okay. And does Tipton work as a pathfinder plant for you, a test bed for the technology, a blueprint for the 9 other plants you plan to build?
For
is
us,
there a degree of truth in that?
So for us, the lead acid side is a cookie cutter. So the plant is pretty standard, recycling plant. It's used. I think there are about 12 of these plants around the world. So there's no rocket science behind it. It's just a question of getting it up, switching it on, and making sure that the productivity utilization actually ramps up as quickly as is practical to do so. And so, no, for us, there's no real major USP there at all.
And Wolverhampton with a lithium-ion battery?
Very different, very, very different on that one. And we may be a little bit longer on Wolverhampton because we are cutting new territory. The USP that we have is that there are other people around the world that have started to recycle lithium ion by putting them into a salt water bath and crushing them to stop the explosion and the fire. But of course, they're adding a huge amount of moisture, and they're losing the ability to extract the electrolyte. So our process is a dry process that enables us to crush the batteries in our special, that we have the IP license on both the process and the plant itself. And it's a dry environment that enables us to shred the batteries without causing fire or explosion. And it enables us then to extract the black mass, extract the electrolyte, the liquid, the small amount of liquid in the battery, but nonetheless, it can be recycled. And we believe it can be filtered to go back round to be reused in batteries again. And then we can then very easily have dry black mass that we can shred and separate the plastics and 1 or 2 other tiny elements in there to get to the 4 key the 4 key metals that are in the black mass powder. So a lot of USP in there for us. And another benefit is that if you imagine a hopper, if you like, at the front end, we can take any combination of the 5 chemistries of lithium ion. So it doesn't matter if it's a car battery along with an e-bike battery and a mobile phone battery that goes in the front end. Our device will and process will handle all 5 chemistry seamlessly and produce the black mass from the back end. So so we're very excited about that. We
Okay,
can
let me
build.
stop you there
Yep.
and ask Lyle Hackett's question. What's the competition for recycling EV batteries and battery metals? Who's your competition in the UK, in the world? Tell us, because we don't know.
In the UK, on an industrial scale, there is none. So we're very much first to market. Around the world, probably the competitor would be Li-Cycle, an American company, who, again, as I said to you, are doing this wet process. Our process is modular, so we can fit nicely into a gigafactory. So, for example, we might need 6 of our modules in year 1 when they're not so efficient at production, but then we can give them back space, energy, and manpower by going down to 2 or 3 in year 2. The other system with Li-Cycle, for example, needs a hub and spoke, so it has to sit within Europe, and it has to be fed by all of the countries in Europe to give it enough feedstock to justify the several hundreds of millions of investment that they have, whereas one of our plants is sub 10 million.
Okay. I've got a nice last question for you from 2 different people, both ask the same one. Sean Wakefield and Pretan Basan. Where do you see the market cap in 4 or 5 years' time? Last question. I know it's a crystal ball one, isn't it?
Well, I have to be very cautious about making that sort of statement, I think, unfortunately, in my position, because it can influence share price. So
let's not talk share price then. Where do you see the business in 4 or 5 years' time?
Yes, well, in a full trading year, recyclers, for example, will turn over for 2 plants. It will turn over around 14 to 16 million pounds, and it will have an EBITDA in the early 30s. And our strategy for the next 5 years is to roll out 2 new plants every year, ending with 10, possibly 12 plants in total. And you can extrapolate the numbers forward from that. And of course, what those numbers don't include is the upside from gigafactory involvement, from automotive OEM involvement, and also licensing and revenue streams from doing JVs around Asia, Europe, and America.
Crikey. I have to say, we're going to have to stop you there, but I don't particularly want to. That was fantastic. Thank you so much, Robin. Robin Brundle, chairman at TechMin, Technology Minerals. What an interesting business. I want to hear that all over again. Thank you so much.
Thanks for your time.
And now Canada Nickel Company. Canada Nickel Company Inc. is listed on the TXV in Toronto and has a market cap of around 140 million pounds. That's 140 million pounds, folks. That's no small company. CNC is developing what it calls the next generation of nickel mine in Ontario, Northern Canada, to deliver nickel for the high-growth electric vehicle and stainless steel markets. Canada Nickel says it has industry-leading nickel expertise focused on jurisdictions such as Crawford, its 100% owned flagship project. It recently raised around 25 million pounds. I'm converting from Canadian dollars, of course, for a 2-pit open mine complex there. Chris Chang, Business Development Director of Canada Nickel, joins us from, I'm not quite sure where you're speaking from today, but Toronto, would it be, Chris?
Yeah, that's where I sit right now. Can you guys hear me okay?
Yeah, we can hear you beautifully.
Perfect. Yep. Why don't we just kick it off? A bit about me. I joined Canada Nickel a couple months ago. I had a 16-year career in capital markets as a research analyst to begin. And then for the last few years, I was running this mining sales teams at Macquarie and Raymond James. Let's flip to slide 2. It's forward-looking statements. And so Canada Nickel, we believe that the market is fundamentally short nickel. Every 15 years or so, you get a super cycle. We believe that's coming to fruition in, call it 2025. The analyst community typically gets the supply and demand fundamentals a bit off. I think for the last few years, the market was estimating about a 3 to 5% surplus, but we actually came in at around 6% deficit. Corporate activity has been picking up quite a bit. We've seen BHP come in on a number of deals over the last couple of years, and at Crawford, it's our flagship asset. We own 100% of the asset. We released our PEA last year around May showed a NPV about 1.2 billion and an IRR about 16%. We're looking to announce a feasibility study by the end of the year and a resource update by the middle of this year. We're well funded, as you mentioned, with the $51 million financing we completed. We've started our permitting, and we believe that we're actually in the process of unlocking a district scale opportunity with a number of our exploration targets that we've identified. So on the capital structure, a few things to highlight. After that $50 million raise, we have about $40 million left. We repaid a $10 million loan. We trade around, call it 250,000 shares a day. Right now, management and the team own about 5% of the company, and there are about 7 research analysts that cover us. So just trying to introduce the team here. Our CEO, Mark Selby, he's a chairman and the co-founder of the company. He's a nickel expert in the market. He spent his career since 2001 with Inco. He was actually part of the he was part of the team that tried to merge with Falconbridge in the mid-2000s. He then left and went on to be the CEO of Royal Nickel, and they advanced the Dumont project to a shovel-ready decision. Since leaving Dumont, he co-founded Canada Nickel, and the company's been around for about 2 years. This team is basically built with the track record of permitting and development. Our VP of Sustainability, Pierre Philippe, he was very instrumental in the permitting and the First Nations stakeholder discussions with Dumont. Christian Rousseau here, he's our VP of Capital Projects. He has had he was the engineering manager for Detour Lake as well as the Clayton Malartic. Those are 2 very large open pit mining projects in Canada. And with nickel, so nickel. We believe that the nickel demand is. We believe nickel is fundamentally short in supply. We think that the market will have to double in order to meet some of the nickel battery demand over the next couple of years. We were seeing sustained growth in the stainless side of the business as well, but the EV market is just going to be tremendous, and the amount of demand is going to actually force the industry to grow by on the supply side. And when it comes to supply of nickel, most of the production we've been seeing has been coming out of Indonesia and other areas that are typically higher emissions, polluting. On the right side of the scale here, the chart here, most of the laterite operations require more CO2 to produce. That's because of some of it's coal fire powered, and a lot of it requires a lot of furnaces. So it's just typically more pollutive. We believe that the market will look for more sulfide ore that's typically lower emissions polluting by nature. So on the left side here, there's actually a group of rocks called the ultramafic rocks that that Crawford has. It is serpentine rock, and essentially what happens is the rock, when it reacts with air, just starts grabbing the carbon, and it forms a magnesium carbonate, which reduces the CO2 of the project. As well as lower emissions, we believe that the market will look for safe jurisdictions for nickel production. When you look at this slide here, there's about 3 countries that control about 60% of nickel supply, whereas OPEC had about 54 in its peak. And we believe that, especially after what we saw in March with Russia, that the market will look for safe jurisdictions for supply of nickel. So at Crawford, we are located in Timmins, which has very strong infrastructure. We have access to road, power, and highways. We have a rail that connects to most of the ports of Canada and Eastern USA. There's a rich history of mining and skilled labor in the area. Glencore has their Kid Creek operation just very nearby, and they have a smelting facility around here as well. We have a long, the mining camp has been around for hundreds of years of operations. The mayor of the town is actually an ex-miner himself, so that hopefully that'll make permitting a lot more straightforward. And again, we announced our PA last year. It was a 1.2 billion NPV, 16% IRR, and we plan to develop Crawford in a 3-phase scenario that'll ramp to a peak of 40,000 tons per annum of nickel production. It's a 25-year mine life, so it's very long life already, but we believe that we can actually extend that well beyond the mine life of 25 years. The cash cost is about $1.09, and the all-in sustaining cost is about $1.94. In terms of the cash cost of Crawford, it'll put us into the first quartile among all global nickel operations. The CO2 emissions will be also first quartile. We produce about 2.8 tons of carbon per nickel equivalent produced. And at 40,000 tons per annum of nickel production, that would put us in the top 5 of nickel production for the sulfide operations globally. And that would also make us the largest base metal mine in Canada. There's a few areas where we believe that we can improve the value of our PEA. First is a resource expansion. I think our PEA used about 900 million tons of resources from our 1.1 billion ton resource. We're looking to potentially double the amount of resources being used in our feasibility study. That's coming out at the year end. We're also working on some recovery optimizations. Right now, roughly every 1% of increase in our recovery, we can add about 90 million of value to our NPV. We're also working on some carbon credits within our tailings facility. That could lead to make Crawford a net zero carbon producer and have credits for sale for the future. And just to go through the serpentine process, when we pull rock out of the ground, it comes out in this dark structure, typically black, and within a year, the rock forms a white overlay. And essentially what's happening is that serpentine process that just grabs CO2 molecules from the air. And again, we believe that we're unlocking a nickel district here at Crawford. Our team has put together 18 transactions to acquire 13 additional targets. So, right now we have one Crawford. Some of these other targets right now share a footprint that's much larger than Crawford, as well as shares some of the same host mineralization as Crawford, and they're just very nearby. So we could see potentially, 4 to 5 different Crawford-like deposits in the area. We recently released a few exploration updates. First on the Reed deposit. Right now, Reed has a larger mag footprint than Crawford. Just to put in a scale, this is Reed. Oh, sorry, this is Reed here, and we've put a few holes in there so far. The assays are pending. I think one of the holes we drilled out is about 354 meters, and it's highly mineralized. We've also put in some holes at Deloro and Rayo and Nesbit, and I believe some of the grades carry pretty well. Over at Nesbit, we're seeing about 0.27 nickel, and some of the grades at Sothaman also carry about 1% nickel grades from historical drilling. In terms of some of the sulfide discoveries over the years, we're actually the largest discovery since the 70s, but the last significant discovery was Sirius Resources when they discovered the Nova Bollinger deposit. That got taken out in 2015 by from IGO. And when you look at all the sulfide discoveries over the years, they've all been taken out for billions of dollars. Currently, we trade at about $174 per ton of nickel equivalent on enterprise value. That's still well below the peer group here. And when you talk about corporate activity, BHP has been very active. They've made investments over the years, and most recently, they put money into they invested $50 million to Kabanga Nickel, as well. They were very active in that process with Wyloo Metals, and eventually lost the bid on Noront Resources. So in summary, we think that we're getting into a good nickel environment starting in 2025. There's very little visibility for production outside of Indonesia. At Crawford, we have one of the largest sulfide discoveries, and we believe that we're transforming Crawford into a nickel camp. And we have a number of catalysts coming up in the near future, namely starting with the resource update mid-year and our feasibility study towards the year end. And I'll turn it to you, Donald, after for questions.
Okay, Chris, that was terrific. Thank you very much indeed. So are you basically telling me that Crawford is quite a big deal?
Yeah, I mean, it's going to be a massive district scale opportunity that we believe will have years and years of production. We know we've already defined 25 years in our PEA, but we believe that that can go on well beyond that, or if you're a larger, or it could get larger in scale by far.
And Reed has a bigger footprint and is just as, if not more exciting than Crawford.
Well, it's still early days in some of our drilling at these newer targets. It's bigger, it shares the same mineralization, but we've yet to see what the full capacity of Reed would look like. But right now, Crawford's still our flagship, as far as we know.
Okay, but in terms of nickel does tend to come in bundles of deposits, if I understand correctly.
Yeah, that's right. And we believe that's what we're sort of unlocking here within the Timmins camp. There's a number of camps, globally. Mount Keith's one area that has a number of different pods. We think that Timmins is potentially going to be something like that as well.
So yeah, so in terms of the geology of it all, the geology is looking quite positive for you guys?
So far, a lot of the mineralization that we've seen for all the targets are sharing the petlandite, hazelwoodite, and aurorite type of geology, and we're seeing that in about 9 of the targets so far that we've drilled, or have at least confirmed.
Okay. Now you're working towards a feasibility study at the year end. What sort of work programs do you have on the ground? Developing the resource for that feasibility study. Tell us all.
We're still drilling right now. Some of it's being infill and some of it's exploratory drilling. Mm-hmm. So we're working on 2 programs. Community engagement with the First Nations. That's something that we're also advancing towards feasibility.
Okay, talk us through the First Nations thing. This is something in the UK we just don't know anything about. So take us gently through that.
Yeah, so there's 3 groups that we're primarily working with, and they've all said a lot of positive things.
Talk us through Indigenous communities, because we don't really know about Indigenous communities in the UK. Right.
So it's essentially the First Nations groups that are Indigenous to land in Ontario. Uh-huh. They have, it's a community that we negotiate, where we engage with to use their land for various things, and we have.
And you're in discussions with 3 of these groups, yeah?
Yeah, 3 of the main groups that we're currently working through. We have a lot of engagement with those groups.
Very good. Okay, let me take a question from the audience. Gerard Minto, stand up, Gerard, wave your hand. Hello, it's your moment in the sunshine. Let's talk Russian nickel. Russian nickel hasn't been officially sanctioned yet, and they seem to have issues shipping stock. Are you seeing or hearing about companies avoiding Russian nickel? In other words, are people not buying Russian nickel? And what would it do to the price of nickel if it was sanctioned completely?
Yeah, so we have seen, at least the manufacturers try to avoid it. I'm not sure if they fully stopped buying Russian nickel, but a lot of that could be displaced to other nations. For example, if China decides to buy Russian nickel and use it, that would just essentially reroute nickel production or purchasing to different countries that are willing to avoid sanctions. Mm-hmm. But at least your large corporations are going to try to avoid buying Russian nickel when they can. Okay,
so if we were to project beyond your feasibility study, which we assume is glorious and comes up with all the things you need it to, and where would your nickel be smelted? Where is that? I think it's called is it a mid-tier processing?
Yeah, the midstream processing.
Midstream processing. Where would that take place?
Right, we're trying to get that all done in North America. There's actually a number of facilities that are being contemplated from the precursor companies out there. For example, I just actually got back from Korea, and one of the companies had mentioned that they're actually several companies are looking to actually build or potentially invest in plants in North America to capture this market. And one of the groups said that they wanted between 250,000 to 500,000 tons of nickel capacity in one of their facilities that they're looking to build in North America. So we are looking to get that done all locally.
Wow, that's a serious amount of processing. Yes, you're a relatively new player. You've been around for a couple of years. Put Crawford into scale for us. That processing plant can take 250,000 tons to 500,000 tons and smelt it. How much would you hope to be able to produce?
Well, at our peak, we're looking at a Crawford alone. It's about 42,000 tons. So that's not even enough for this particular group. We would need several Crawfords.
Say the number again, please, Chris.
Well, we would produce 42,000 tons.
42,000 tons
at our peak per annum. So we would not even satisfy what they would need on our own. We would need multiple Crawfords.
Yes, but would you hope to be able to find multiple Crawfords?
Yeah, for a number of our targets right now that we've identified with these large footprints, we believe that they have a shot at being multiple Crawfords.
Brilliant. And would you build the mine yourself, or do you plan to exit at a certain strategic point?
Well, we try to de-risk it as much as we can. We always have an obligation to our shareholder to show the best offer in, but I mean, we're going to advance it the way we can by permitting and completing all the studies.
But this is a CEO question. Maybe this is a bit mean to ask you, but you will play your cards close to your chest, of course. But is the strategy anything goes? We might take it all the way to develop a mine, or is it strictly exit is get the best price for Reed and Crawford and off we go to find the next Reed and Crawford?
Yeah, I mean, if you look at the slide where I showed the large sulfide discoveries over the last few years, they've all been essentially operated by large mining companies. I mean, we're going to go through the process of trying to advance as much as we can. But just generally, it's large companies that operate these things.
Mm-hmm. Okay, you're buying more licenses around Timmins, which is the base camp. Presumably, you're hoping to make more discoveries around there, and that's all part of that same strategy.
Yeah, I think we have in our 9 to 10 targets, we have lots to drill, lots to delineate, and yeah, I think we have potentially multiple Crawfords, so tons, maybe many 25-year mine lives.
Very good. How much would a 2-mine open pit project, which is what I think is being envisaged, how much would that actually cost to build, and how long would it take to build? What's the time frame?
So our last PA showed a capex of around $1.2 billion to build Crawford. In terms of when we can start up, assuming a 3-year permitting process and a 2-year build, we can probably get in production by 2027. So those are kind of rough economics on what other Crawfords could look like in the area.
Okay, and where would the funding, even very broadly and roughly, come from? Is it a mixture of equity and debt, the standard answer?
That's standard. There's also offtake options, and some of
offtake,
these.
yeah.
Yeah, and what we're also seeing is a lot of these
royalties.
Yeah, and what we're seeing also with these companies is that some of these automakers are getting involved directly with nickel companies because they have to secure their supply of nickel in order to process it. And we're seeing Tesla ink a couple deals, and we think the automakers are going to get more aggressive in securing their feed upstream.
So they become potential buyers from you guys,
or investors at least. Yeah,
investors. Okay, could you see yourself working with an OEM as an investor?
Yeah. I mean, I think it's still fairly new for them on how they would go about it, and but I think they could potentially come in as like any other strategic investor.
Okay, Canada Nickel are developing processes. You were talking there about your process being very green, and you're pushing the production of net zero carbon nickel, cobalt, and iron products. So is clean green nickel important to motor manufacturers, and will they pay more for it?
Absolutely, it's important to them. Certainly, all the discussions that we've had in the last weekend with my precursor meetings in Korea was largely surrounded on the fact that it was green nickel. In terms of how they'll pay for it, I think eventually we were thinking that you might see premiums go for on different end uses. So, for example, briquettes. versus MHPs versus nickel sulfates, you might see different pricing mechanisms for each end product. So we might see that, and but to the extent of how important it is for them, they definitely care about the downstream and the upstream of where they source their nickel for their scope 1 and 2 ESG requirements.
And why do they care?
Well, they're being measured on how much they emit. For them, on how much they emit themselves and how much their suppliers emit. So that'll be becoming more of a focus for them, for sure.
So is it a potential competitive advantage and also a cost advantage to you guys?
Definitely
you
an
are
advantage.
actually green.
Yeah, definitely an advantage for for us, because we produce we're producing out of a ultramafic camp. So certainly, yes, our nickel will be possibly preferred.
Okay, let's take a look at you in over the coming year. What kind of news flow do you think we can expect from Canada Nickel over the next 12 months, say? Up to feasibility study.
Yeah, so obviously the feasibility study by year end. We're going to have a resource update by mid-year. There'll be ongoing exploration updates and First Nations discussions. You'll see updates around that as well.
Do people should we take the feasibility study as a big deal?
Definitely will be. It allows us to it allows us to be execute on the bank financing mechanisms, as well as it gives us a better it allows us to better define our project in for the economics around it. So definitely will be a big catalyst.
Okay, wonderful. Okay, let's leave it there. Thank you so much, Chris Chang.
Thanks.
I'll let you off the hook. Thank you for answering all my difficult questions.
Thanks.
That's Chris Chang, VP Corporate Development from Canada Nickel. It's a fascinating project. Thank you so much for talking us through it, Chris. That was wonderful. Thank you so much. And on we go to Goldplat. Goldplat is a profitable South Africa-based gold producer with international gold recovery operations located in South Africa and Ghana. The management have successfully refocused Goldplat on its core metals recovery business, and the business has been steadily profitable for several years now. Goldplat is throwing off sufficient cash to expand into South America on a measured basis and to build a new PGM recovery plant in South Africa itself, probably close to the original base, I think. Werner Klingenberg, the Goldplat CEO, he joins us live from Johannesburg. Welcome, Werner.
Okay, thank you, Donald. I think tonight I would like to give the audience a quick sort of background on Goldplat. We've had a few of these sessions before, and I'll rather try and spend a bit more time in terms of answering questions. Now, Goldplat PLC is an AIM-listed company. We've been listed since 2006. We focus on the recovery of precious metals and gold, as the name indicates, Goldplat, from our operations in South Africa and in Ghana. Our focus is primarily on the recovery of gold and precious metals from byproducts. Just want to move to the slide. From blue chip producers in the industry, the operation started in South Africa. We've later expanded into the Ghana and West Africa. And we're currently planning to extend our operations into South America, specifically Brazil. So if we look at Goldplat, in essence, we are secure material from current producers, as well as assisting current landowners which has properties which has been contaminated by historical mining activities. We assist them in terms of cleaning up surface sources and processing that through our plants. At the same time, obviously, recovering value and returning that to to the landowners and the owners of the material on hand. Now, if we look at what the specific material is that we're processing, we focus on byproducts, fine carbons, mill liners, wood chips being produced and exported from current CIL operations at the gold plants in South Africa, as well as in West Africa. We also then look at surface source materials that we process through our various CIL circuits in South Africa. And we've really got a diverse setup, specifically in South Africa and also in Ghana, which includes milling circuits, jigging, gravity, as you can see on the slide. I'm not going to go through everything in detail. In the end, what we produce is gold doré as well as silver doré. We produce gravity concentrates through our gravity concentrate circuits, as well as other concentrates that we deliver to smelters for further processing. Now, if we look at our current numbers, it's always nice talking while the gold price is going up, as well as the share price. And we're going to talk a bit about the profitability and the increases we've seen over the last 3 quarters. The share price is currently at 8.5p this morning. As you can see on the graph, we've been moving up from levels between 7 and 8 over the last 2 months. This has primarily been supported with us starting to distribute money to shareholders through share buybacks. We've bought back roughly 400,000 pounds of shares during the last 2 months, which is the first time we started distributing in probably the last 10 years, which has been the indication to the market over the last 3 years, which is our intention. Our market cap has increased to 14.41 million. We still believe that's probably quite below intrinsic value, and I'll provide you a bit more detail as why we are saying that shortly. If we look at our shareholding, we currently have a major shareholder in Martin Oy, an individual who owns close to 29%. Now, when I started, I specifically spoke about Goldplat and the fact that we've gone through some changes over the last 3 years. In essence, Goldplat was listed as a recovery operation, the one I've explained to you just now in 2006, with the aim of using the working capital generated from these recovery businesses to build a junior mine in Africa. Now, for various reasons that I'm not going to explain, we've decided to exit that strategy in 2019 and focus primarily on the recovery operations, which has been historically profitable, which has been our niche and our strength. And in the slides, I tried to sort of extract just the operational numbers of the 2 recovery operations, South Africa and Ghana, consolidated for you. This excludes, obviously, the finance and interest costs or foreign exchange costs, as well as the listing costs. But it's clearly, you can clearly see that over the last 5 years, on an operating level, we have been generating around an average of £4 million out of these 2 operations. During the last 6 months up until December, that we produced that in the last 6 months. If we look at our operating numbers at the end of the 3rd quarter, we've actually produced operating results for the 2 entities of close to £6 million. So if we go and now strip out the legacy mining operations, which we've impaired and we have taken out of our accounts in 2020 already, it is clear that we are looking at a business which has been profitable, not just for the last few years, but actually has been profitable for the last 10 plus. I went and, I don't have the figures here, but I went and actually this morning just had a look for the last 10 years on a net profit level, the two recovery operations generated net profits of 30 million after tax and interest, and only incurred capital of less than 10 million, which just indicates to you the strength and diversity that lies in the recovery operations, as well as the area we are servicing. I've just indicated that we had quite strong results for the 9 months. You'll see out of South Africa, we've produced 3.5 million operating profit for the 9 months. And in Ghana, we're also seeing good results, not just in this 9 months, but actually the 9 or the 12 months before that as well. And we've generated 2.5 million on operating level there, giving you the 6 million number that I referred to just now. If we jump ahead and we just look quickly at the financials for the prior year, 30 June 2021, as well as 31 December 2021, which is obviously unaudited, we can see that we actually have quite a low multiple. If we look at our price earnings ratio, our basic earnings per share for the first 6 months was around 1.2 against a share price currently of around 8. In the previous year, for the full year, that was basically what it was, also around 1.2. And that gives you multiples currently around between 3 and 4. If we take that in combination with our balance sheet strength, you can obviously see why we still believe that there's a lot of value in this company. And I'm going to talk about a bit more about what does that mean for us going forward, and what does that mean for the shareholders going forward specifically. If we look at our net current asset position, we can see that current assets at 29 million, current liabilities is 20. We've got roughly 9 million pounds locked up in working capital. And that is against only a 3 million pound overdraft, which relates to a share buyback that we've done in the beginning of this financial period. In South Africa, we procured roughly 16% of the most profitable subsidiary in the group over the last 10 years. And that we've done basically because our minority shareholder was looking to exit. We saw the value. We also still had a lot of money payable to Goldplat Recovery, the subsidiary which we procured the 16% from. And for that reason, it made sense for us to invest further into the operation. And we can already see that value coming through to shareholders as well. Now, if we look at the net working capital position, obviously that is quite high if we consider the operating levels. And that is really for a number of reasons. I mean, the one is because we are doing extremely well at the moment and we see increased activity. You are seeing, together with that, a lockup in working capital. The other reason is that we are obviously entering and being aggressive in terms of new markets, meaning we need to pay certain monies up front for material we procure to process. And then we're also experiencing at the moment some sort of delay on exporting some of the material to smelters as a result of the normal supply chain situation that everybody is facing in the world at the moment. We are also we tend to have a longer lead item in terms of the material we process, which can be around 120 to 160 days to turn around. The encouraging thing is that as all of this is part of normal business, we can see this value coming through in the future. And I'm going to talk a bit more in terms of how we see also ways of limiting the amount we're going to invest in working capital. And with that additional cash being generated or turned around from working capital, we'll be in a good position to continue to evaluate either to distribute to shareholders or for any other potential projects that might come around. So if we now just stand still for a second and then consider where Goldplat PLC is at this point in time. We've exited the mining industry, which has been sort of a legacy drag down for the group. We have been profitable, we've been generating cash, we started to distribute money back to shareholders. And I think for a lot of shareholders out there, the question is, well, what are we going to do with this current good set of results and this good base we've generated? Now, if we look at, if we start and we look at South Africa specifically, we have really three sort of revenue drivers. The one is current mining operations where we secure byproducts from. The other one is raw materials, which we normally procure from landowners whose property's been contaminated by historical mining over the last 150 years. And the third one is obviously the PGM market. Now, on the byproduct side, we've got quite a good and strong client base. In South Africa, there is basically two major producers at this moment. We have one of these on contract, and we've got most of the other smaller ones. We do, however, still have the opportunity to grow and to diversify by securing material from the other large producer, which is the major aim, but also obviously is an indication that on the byproduct side in South Africa, there is still scope to grow this side of the business. If we then go and look at the raw material business, at the moment we've potentially, or we have invested over £2 million in raw material, which is basically 2 years or 24 months plus minus of supply for the CIL circuit. Now, there we are looking at key strategic partners to try and find ways of securing large volume of material. Let's say another 3 to 4 years, taking the material on hand to over 5 years. But the plan there is to do it without necessarily needing the working capital outlay, where we secure that material where it is on that site or on that premises, and we don't need to go and truck it to our premises, incur all the transport cost and the acquisition cost as a start. And that's something that we're really focusing hard on in terms of securing and sort of just being able to give the market a view on the CIL side or the raw material processing side of a bit more of a longer scope. Then on the PGM or the precious metal side, this is actually quite sort of encouraging. It's something we've been doing for a long time, although it's not been too a big part of our margin. However, we have been able to secure more and more material to an extent that it warranted us to invest into a small flotation plant at our premises in Benoni in South Africa. And with that investment, it will actually now give us the ability to be a bit more aggressive in terms of going into the PGM industry and identifying smaller resources that contains PGMs and that needs processing in one way or another. And we believe that our current facility, together with the flotation plant, which we've constructed and we're busy commissioning, we will then be in a position to actually grow that side of the business quite aggressively. Then if we look further in South Africa, the actual big potential still lies in our tailings facility. We've got plus minus 2 million tons that has been deposited from the processing of material, as I've described earlier. The various type of materials that we've processed has been deposited on a tailings facility. It's containing roughly 2 million tons at the moment. When we did a JORC compliant resource on it in 2016, I think the tonnage at that point in time was 1.6 million. And at that point, it contained roughly 82,000 ounces of gold. Now, the plan is to process that facility again. The current grade is roughly 1.7 grams a ton. And we're looking at processing this through a third-party facility. Now, what is important to understand is for us to get to that point, we are going to need three different things addressed. The first one is we're going to need to have a new tailings facility in place. Adjacent to the current facility, we have applied for a license to the Department of Minerals Resources, as well as the Department of Water and Sanitation. And the current indication is that there has been acceptance of that licensing request. However, we're still waiting for the final license to be issued, after which we can then construct and start depositioning on a new site. Once we start depositing on a new site, we'll then have the ability to actually process the old facility. Until we haven't moved off it, obviously we won't have the ability to actually start processing that facility. Now, to process that facility, secondly, what we're going to require is we're going to require to have a pipeline installed to a third party. That's in the vicinity where we currently are. We have applied for a license for that pipeline as well. Luckily, a lot of the area where we want to install the pipeline has been under servitude, and there has been pipelines before, and we quite what's the right word? We're quite positive that that we should be able to actually get all the licensing in place by the end of the year, after which we can then look in terms of installing that pipeline. And then the third thing is obviously finalizing commercials in terms of processing that material through the third party, as I've indicated. Now, we have come a long way in terms of where we were a few years ago, and we're definitely on the right route in terms of finding a way of actually then extracting the value from this facility. Now, we are aiming to utilize a third-party facility for two reasons. The one is it will give us the ability to process material at a quicker rate through a bigger facility, which will be beneficial from a cost per ton basis processed. And secondly, it will or should be able to give us then additional area to deposit the material that's being processed, which will also be required. So if we look at South Africa from a recovery point of view, I still believe there's a lot of scope in terms of diversifying and growing the business and adding revenue streams to the business. And if we then look at the Ghana operation, I think we have done extremely well since we moved away from mining. We focused management attention on the recovery operations. Probably Ghana has benefited the most from this. We've seen a lot of material being secured. We have secured material in Mali, which was quite encouraging. But even with the good results out of Ghana, the reality is there's still clients in Ghana that we still need to secure. We still haven't opened up Ivory Coast and all the potential sites there. We haven't opened up Burkina Faso. There's still a lot of plants that we need to get contracts with in Mali. And then I haven't even spoken about Guinea, Mauritania, and a lot of the others. So from that perspective, Ghana still has the ability to grow, still has the ability to diversify in terms of increasing the amount of clients. And apart from just growing our byproducts base in Ghana, we are still looking at finding ways with through which we can potentially partner or engage with government to assist them in terms of the cleanup and processing of artisanal tiles, which remains a problem, I guess, all over West Africa, where there is a lot of artisanal operations and areas that is being left behind that needs to be rehabilitated, and that is something we continually invest or spend time on to see if there's ways we can enter that market again. We've done it quite successfully in 2012, 2013, after we've stopped for specific reasons at that point in time.
One more minute, if you could wrap up now, please.
That's 100%. Thanks, Donald. I think that then the last one is obviously our expansion into South America. We're doing that on sort of a measured basis. We're looking at securing a property in Brazil, and we will then expand on that property based on the material we identify and the plant we require. Lastly, we're obviously going to look at trying to extract more value out of the working capital and the cash lockup that I've already indicated, as well as then looking at how we are going to handle the investment we still have in Caracal. We still have 5.57% of interest in Caracal Gold, as well as $1.5 million US of royalties that should flow through within the next couple of years. And we're going to need to look at ways we can actually extract the value from that. Obviously, that investment came from the sale of Kilimapesa when we moved away from the mining strategy in Kenya.
Very good. You touched upon the share buyback situation.
Yes.
Whereabouts have you actually finished the share buybacks?
Yes, Donald. We procured or bought back £400,000. I would say we've completed the initial share buyback. Obviously, distribution to shareholders remains important for us. I mean, I've explained the nature of our business. We're really a servicing industry. We procure material, we process the material, we generate cash flow, and I believe the surplus cash flow needs to go back to the shareholders in one way or another. So
did you regard the share buyback process as a success, and would you consider doing it again?
Yes, I mean, well, I guess the reason why you're doing it is to get value back to shareholders. One way of doing that is obviously with the increase in share price. We've seen some sort of a re-rating in that. But until we haven't seen the share price reaching the intrinsic value we believe it should be, obviously there's reason to continue share buybacks, and also reason to say, well, we probably didn't achieve what we thought we're going to achieve. We were expected to see obviously a bit more adjustment upwards on the share price.
You thought it would give the share price a bit more of a boost?
Yes, exactly.
Okay. I've got a gentleman here who's asking about it's in the same line of Michael Fenton. When do you envisage paying a dividend? I mean, it sort of does fit into the share buyback program thing. So it's
yes.
When might you consider paying a dividend? That's another use of
yes. I mean,
funds.
the reality is,
perhaps a more obvious way of getting money back to shareholders.
Well, I mean, Donald, as we've indicated to the market, we want to distribute value back to them. We've started that in doing a share buyback. I can't say that we will not look at dividends. I mean, as long as the board, however, believes that we are trading significantly below intrinsic value, there will be reasons and support to continue doing share buybacks rather than dividends. Okay. There's obviously more than just that to evaluate at the end of the day. And I'm sure for each investor, whether it's a share buyback or dividend, some investors might benefit more from a dividend. We, however, felt initially that the share buyback was the right option, but we will evaluate it every time we want to distribute value to shareholders. And I mean, currently we've got a lot of value in working capital. I've explained what is happening on the supply chain side. So once we see some sort of a release, we're generating some cash again on the back of the profits I've mentioned. Yes, we are going to need to look at distributing again.
Okay. So just for clarity, yeah, I think you had almost £6 million worth of profit in the last year. Is that correct? Almost 6 million?
Well, yes, Donald. I mean, I guess I need to qualify that.
Is that gross or net?
When we do the quarterly updates, we provide operating numbers. So that's before interest, foreign exchange movements and tax, and also before listing costs. However, if we look at the numbers achieved for the two operations on the operating level for the first 9 months, it's already in line with what we achieved in the 12 months prior. So yes, that gives you some sort of an indication of where the group and the cash flow generation is, yes.
How much of that, I suppose what I'm getting at ultimately, is what percentage of that is available to spend on projects? By projects, I mean the PGM recycling plant, the tailings, South America, Brazil.
Well, Donald, I think, that's the beauty of our business. I think to an extent we've been capitalized, I won't say fully, but significantly so. I mean, we need about we indicated around £300,000 for investment into South America, and we'll grow that slowly based on what the requirements is in the future.
And how is that progressing? Have you found a plant that you want to that suits your requirements in Brazil?
Well, I mean, the thing is Donald, obviously when you enter a new jurisdiction, you need to make sure you do it properly and right. Finding a property is one thing. Obviously, getting it properly licensed and making sure you start the process on the right foot is even more important. And I think that has been taking a little bit longer than what we've expected initially.
But on the other hand, it is a foreign country. It is Brazil. Perhaps this may be more normal than you think.
Yes. No, I think so. And I mean, from that perspective, for me, I'm quite comfortable in the development in South America. As indicated, we're not going to invest a lot of money. It's £300,000. But I believe there's a lot of value we can extract from that investment in future and leverage on it. In reality, we want to start targeting the lower grade material. And by securing that, it will then open up the markets on the higher grade material, which the ultimate aim is also to secure. So it's not just about...
In a sense, that is more for the future. Much more today is the PGM recycling plant.
Yes.
Just at a very basic level, for those folks who don't know what PGM is, could you explain what PGM is and what your filtration tank is going to do, and what's the time frame for it all to be up and running?
Well, I mean, the precious metals, I mean, the first thing that we need to note is that South Africa is probably the biggest producer of PGMs in the world. So it just makes 100% sense for us to enter into that market. We have been involved in it from the start. It's basically platinum, palladium, rhodium, and all the other metals associated with that. And the aim would be to look at securing similar type of material we've seen in the gold industry, wood chips, for example, and also other contaminated effluent dams, etc., to see if we can extract additional PGMs for industry, to return value to them, to obviously do the environmental cleanup, which I haven't spoken too much about tonight, which is obviously an important focus for us to assist the industry at large in terms of reducing their footprint on the environment, and then extracting the value through our various circuits. So the flotation plant we added is just one part of it in reality. But flotation is just a process by which you upgrade the PGMs contained into a lower mass, and that will give you a product where you can actually extract the PGM profitably from.
Are you in a position where you can actually put the foot to the pedal and do larger volumes of PGMs now?
Yes, I mean, I think the advantage is once you've got the circuit, you'll be a lot more flexible and can be a bit more aggressive in terms of going into the market and securing material. Where in the past, we realized that certain material we can procure, but it's going to mean investment in terms of cash, but you're not going to see the value coming out in the near term. We've got the ability to test that material quicker, understand sort of the margins, and then be able to do proper agreements where required.
Where do you see Goldplat in a couple of years' time? You're doing lots of good things, and you've got lots of different projects being planned. Pull that all together for us and say, so you're the boss. What's your vision in 2 years' time?
Well, Donald, I mean, for me is that, I mean, we've been part of the industry for more than 30 years, if you go back even before listing. And I think we have been adding a lot of value to industry. It's about fixing those relationships even stronger in terms of contracts to be able to indicate to the shareholders and give them a certainty in terms of long-term supply. I believe that our strength remains in the ability to actually extract value from smaller resources because we have low overheads. We try and manage our capital as low as possible. And through that, I think there's a lot of opportunities we can extract in the gold and the PGM industry. And that would give us a solid base to really build on and grow from. I believe there's a lot we can do in the group. Not just in terms of increasing the share price and the business as large, but in reality also in terms of assisting industry in terms of cleaning up and sort of formalizing that. Because in the end, you also have a lot of industries and mining operations that's coming to end of life, and I believe we will play a big role in terms of formalizing that downturn and extracting value.
Final question to Werner: what might the news flow look like in the coming months? Why should we hold the stock?
Well, Donald, I mean, I've tried to highlight towards the end exactly what I believe where the value is going to come from. So it's going to be on strategic partnerships. It's going to be on development around the TSF. It's going to be on results from the flotation plant. It's going to be growth of resources and client bases in West Africa. That's probably going to be the key in supporting us and the share price going forward.
Werner Klingenberg, CEO at Goldplat, thanks you very, very much for joining us from Johannesburg, or Pretoria, which I'm told is all part of the urban conurbation, which is Johannesburg these days. Thank you so much, Werner, for your time. That was fantastic. I really enjoyed that. Very interesting, and it's great to see how you've got on top of that business and really made it sing. Take a bow, Werner. Well done.
Thank you, Donald. Appreciate and thank you for the audience.
Well, that's it from us after another great evening. Thank you very much to all our speakers for joining us from around the world, and to their support teams who never get thanked. Thank you to their support teams for doing a great job in getting them all there. Thanks also to our great support team, the London South East team, for getting us here. I'm always grateful for your help. Thank you. I'd like to say a special thanks to Red Cloud Financial Services. They are the Canadian broker who connect us to such high quality mining companies in Canada. Don't forget, you can trade Canadian stocks on the Interactive Investor trading platform. Good night and enjoy the rest of your evening.